Hi friends, welcome to another video by Smart Investor. My name is Ganesh. Today in this video we are going to discuss an interesting strategy which I have taken on Infosys before its quarterly results and I exited after the results. So I would explain through each and every step how it has given a wonderful profit and what are the steps and adjustments I have taken over a period of time during this strategy. Every step and adjustment is definitely useful to you understand. Without skipping it, please watch entire video so you would benefit more knowledge for sure. Let's get into more details. The strategy name is nothing but bullish ratio call spread. Let us understand this terminology. What is bullish ratio call spread? And what is another direction for the market? Sometimes market takes neutral, right? And sometimes market may take bearishness. So at any point of time, a underlying stock or market can be having three directions, either neutral or bullish or bearish. If I told you there is a strategy from which you can benefit or gives you a good profit, either it is neutral, either it is bullish, or either it is bearish. So a strategy is giving a profit during either of three directions. Definitely the strategy would be getting higher success rate, which is higher POP. Probability of profit must be 90 or above. Yes, what you had is right. Definitely this strategy would give you more success rate. That is a strategy we are going to discuss, bullish ratio call spread. Let us understand more details. What is the ratio spread? Right here, ratio spread. When you say ratio spread, right? So number of options bought and number of options sold are not equal. Maybe you sell number of options more and number of options bought would be less, or number of options sold are less, number of options bought would be more. This is called a ratio spread. Let us understand more details what exactly ratio spread. Generally, ratio spreads are like this: 1:2, or 2:3, or 3:4, right? So it would be anyway. So these ratio spreads are also called leverage strategies. Number of buys and number of sells are not equal, means one is additional knacker would be there. That is where you are leveraging your existing margin. You are playing with more with your margin. So obviously risk reward would be also more. That is what we call ratio spread. When you say ratio spread, means 1:2 means like one buy and two, let's say two sell. This is called 1:2. 1:2 means one buy, two sell. 2:3 means two buy and three sell. Is called ratio spread. When you say this buy and sell together, if you apply on calls, that is called call spread. If you apply this ratio spread on puts, right, that is called ratio put spread. When do you generally use ratio call spread or ratio put spread? When you expect underlying stock or market would be bullish, neutral to bullish, in that case, that is where you use ratio call spread. Underlying stock or market is bearish or neutral to bearish, that is where you go with ratio put spread. Here we are doing this ratio call spread because I am bullish on the stock, Infosys, right? I am not very much bullish, not ultra bullish. It is neutral to moderate bullish. Within a time, within by expiry date, it is neutral and slowly inching up. That is what I am expecting from this stock. So it is neutral to moderate bullish scenario. I have taken this ratio call spread. Hope you understand this. What is ratio call spread, right? Let's understand this by chart. What actually happened? When did I take this trade? When did I exit the trade? How Infosys has behaved during this period of time. This is the Infosys chart. Let's understand, right? Chart reading is very important to understand anything, right? So this chart reading is historical data or whatever, right? Representation of a graphical information. So we'll understand one by one. If you see, right, on 27th September, Tuesday, I have entered into this trade. On 24th October, on Monday, I closed the entire trade. When you see this trade, right, see, from moment I entered into the stock, right, this trade, almost, right, opposed with the ups and down, overall it appears, right, like this, right? So that is where we call this bullishness. So exactly whatever I expected by this underlying strategy, Infosys by between 27th September to 24th October, overall it was very much bullish. Of course, bullish in the sense, yeah, moderate bullish. This is not ultra bullish, as a moderate bullish. If you see here, right, when I entered this trade, this is around trading 1400, just below that. When I exited this trade, it is 1500. So it was between 100 points. It rallied 100 points, 1400 to 1520, means 1380, 90 points to 1400. I mean, sorry, 1520 points it rallied, which is very good rally. I mean, this is a moderate rally. It's not like the ultra bullish 10% above, not like that. So slowly it actually during this course of this strategy I was holding, it has taken multiple, right? Green, again red candle, again red candle, 3 red candles. So right, so this is up and downs, very much important, right? If started keeping up and up, then this strategy definitely would be in trouble. But it has taken it as its own behavior, ups and down, but finally I started trade with the 1400 around and exited at 1500 plus. So 100 points range it has moved, right? Now let's understand. So as per the strategy, it has very well behaved as expectation. Let's understand how I have taken, what are the strikes, what are the premiums, and what was payoff graph was looking like that. Let's understand. Payoff graph initial trade setup, right? You see, 1400 call I bought, this 1400 call I bought, and 1500 call sold. How many? 2, right? You see here, right? So 1 is bought, 2 is sold. What is called? This is 1:2 ratio spread, right? If you see that premium was very high because it was result time and implied volatility, IV percentile was also very high that time, around 90 or plus. That was the right time to enter into this ratio spread, means credit ratio spread. So bought call was having 50 rupees premium, sold calls having 20 rupees premium. So 220 is 40. Still minus, like still 10 rupees debit is there. 10 points debit is there. You may ask, sir, you already taken a put, right? I would explain put. Put I have taken, it's not a part of ratio spread. Put I have taken, means I sold put 1300 put to get more credit, because anyway my view was on Infosys is bullish. In that case, why shouldn't I sell put? Because I'll tell you another reason, right? So why I sold put here. So one bought, 2 calls sold. Here one additional call was sold. that would take additional margin. Then if I sell additional put, what happens? This additional call is managed, margin is managed another 15 to 20,000 this put. No, so 1300 sold put, 1500 additional call sold is together as strangle, and 1400 bought a call and additional one, right? 1500 sold together is margin is okay. So in a way, this is very well balanced trade. There was no naked, literally speaking, there was no naked, but still it's very much balanced with the high premium I received. Break even, right? After this trade altogether, buy one call, sold two calls, of course, sold one put, together was giving me break even is 1282 to 1617, which is very good, right? So high range I'm getting around 16 plus 7%, almost 8, almost 24% range I'm getting. This is very important. During this kind of spreads would also give you wide range of spread. That's where the spread is would be giving higher success rate. Here you can see a POP is 67%. Still, we'll see. We'll go ahead and we understand how it has actually improved much better. Next day, I mean, not exact dates and all. A trade book I will be giving you at the end of this slide. You understand what are the dates and what are the premiums or what are the adjustments I taken. So this is a graphical representation to make you understand better. Earlier I told you, right, we had a shortage of around 10 points by credit spread, right? So to cover up that call, I sold additional one more 1580 call for 9, right? With this, what is my spread now? 1:3. This is called, I told you, right, leverage spread, right? 1 bought, 3 sold. I have been utilizing my margin. I mean, I'm taking more risk. Of course, 1580 is very far OTM when you say, right? If you see here, see, after taking this 1580 call sold, my range has come to 1273 to 1603. It has improved again more, 23% range I got almost. And POP earlier was 67, now 82%. You observe this POP, still it will get more improvement. You understand one by one. Of course, profit is would be more. I got additional 9 points. With this 1:3 ratio spread, debit I paid. Here if you see, and debit I paid 50 points, this 20 points together 40 points, it 9 points together. So no credit, no debit almost. So by call spread, I have taken credit and debit was nothing, both are equal. So if it starts moving up, I would definitely get a good profit with this one. So you're hoping you understanding, right? So how I'm managing with the different legs with the different points. I did enter all legs at one point of time. When Infosys was trading at below 1400 plus or minus 10 points, that is the time I entered put and call and sold additional calls. But it went slightly up, almost 40 points. Then I took additional 1580 call. When Infosys was moving higher, 1445, what has happened? I exited 1300 put with a profit of 5,900, close to 6,000. After I closed this 1300 put, what has happened? If you observe this payoff chart, downside risk was gone. Now break even point is only 1600. POP I got 90%. Do you observe this change over the period of time? So I mean, I was actively managing the strategy and also removing the downside risk. What has happened? Again, Infosys was corrected another 20 points. So then what has happened? That time, again, I entered into 1280 put for rupees 7. Do you remember? Here, this is what I closed at 7 points earlier, of 7 points some change. Again, I entered, fell at lower strike with again 7 points. So ideally, whatever I had taken 1300 put earlier 27 points, still I was having that many points by even after rolling down to put to 1280. And I'll tell you one more thing. Beautiful of this strategy is, see, break even is 1253 to 1600. Do you know? Overall, 25% range I got after this strategy. POP is 88%. So 1250 downside and 1600 upside. It has been there around 1400, means 1200 upside range and 150 downside range. 350 points range you are getting, right? Do you understand this? Do you see the beauty of strategy? You are getting 350 points. So do you think Infosys has been already corrected very well? Don't you think that Infosys must be within this range, 350 points? Definitely, you could say yes. That's where POP is showing 88%. That's why holding this strategy had given me very comfort to continue with this strategy. Right? Hope you understand this ideology, right? Behind I took this trade. What has happened and how it went and all those things I'm explaining one by one so that you would visualize better way. October 13th, on Thursday, post-market hours, Infosys has announced results. We all know that it was very good. Market has opened on a Friday, October 14th. So Infosys gapped up around 4% and up to maximum it went up to 5%, right? So you see 5% it went up 1485. Even 1490 also I saw that above that. After that, if you see this may pay up graph, if I had exited this trade on that day, I would be booking profit of 1700 196, which was 10%. What was the max profit? What was the what was the max profit? 38,000. So max profit is 21% and 10% profit I was already getting. You might be thinking that that was a good time, good profit, 10% profit was very good. Then why did you either you exited or not? I will show you that. Because how when you had this much profit, what are the options you were thinking? Generally, either close the trade, whatever profit was available on the table, book it. You don't know after holding this strategy. It's just a 14th, right? Still another 2 weeks are there in the expiry. Who knows? Again, there would be correction and corrected. This profit would be gone, right? Would be gone, then will be regretted. Right? Several possibilities are there. I will tell you what I have done with this profit. Either I booked it or either I was still holding this profit. I told you, right? I exited on 24th October. Certainly, I was holding this trade and profit. I'll tell you what I was doing. These are the legs I already closed. 1280 put also I closed on that day. It has come down to almost penny. So I closed to reduce the downside risk. And already you know that 1300 put I already closed. And here another point is 1400 call I closed. So I bought 50 rupees and I closed at 80 rupees. 1460 call bought again. I closed this, but I took this 1460. Why I done? I'll explain next slide. Because I was holding 2 calls sold and I was holding 1580 additional FAR OTM call. So I was holding 2 calls, or totally 3 calls sold. If I close this one, then I would be not having any hedge. If it would take next day another 5%, 10%, nobody could save me, right? So to cover up that, again, I had entered to buy 1460. If you see here, also I added additional one, right? I sold 1500 put and bought 1460 put. This is together called bull put. This is called one bought call, that is okay, and bull put would also give me some cushion if it would take another 5% rally. We don't know. To support that, if we continue to participate in bullish trend, I must be able to get a profit. Also, I would be getting some hedge from additional 1500 calls. Guys, this making strategies, recording video, and release it would takes time. So I have a Twitter account. If you have not already followed it, please just you can follow that Smart Investor 44, where I would posting all my strategies and adjustment time to time, where you can benefit more on that. What I have done, how I lock my 50% profit from this is called a profit locking mechanism. I told you, you know, right? You see that 17,000 profit was already available on the table. What should I do? Either exit or stay in the trade more time so that you would get max profit is still more. For that, not to close the trade, what was I could do? I locked my 50%, means 38,000 max, like 16 to 17,000 I could lock. So I have written in the Twitter how I locked my 50% profit and increased more profit as per quarter two results. It's a very much favorable to my strategy. I exited 1280 put with 1600 profit to remove downside risk, and exited in the money 1400 call with 9000 profit. So in the money 1400 call was rolled up to 1460C to lock the profit, and added bull put. This is a strike I explained. This is called how to lock the profit. If I had not sold, means exited 1400 call, Infosys came back to 1400. Let's say, imagine that. What was the happen? What would happen? Profit I got from the debit, right? The buying the 1400 call was a debit, right? The all of 80 points would gone, so I could not get it back. So I don't want to lose those points. That is where I booked the profit and I rolled up 1400 to 1460, so that still I would be able to continue to participate in the bullish trend. That's called profit locking. So final trade, and what I have closed after all the legs adjustment, all those things, what has happened, right? So I closed bull put, I closed all of the things, unnecessary things, cleaned up, and I wanted to stay in the trade for longer time. What I have done, so just I was holding 1460, one call buy, 1500 call sold, only one. What is this called? Now this is called bull call spread. I entered bullish ratio call spread and ended up bull call spread. This is called lossless bull call spread. Do you see in payoff graph? So hope you understanding the strategy steps I have taken, right? After taking these steps, max loss, no loss actually, minimum profit is 16,500. Max profit was 28,500. This is how I converted. This is how I transformed this strategy with various legs and spreads. Slowly, I was making some adjustments, and also I'm booking profit timely, and made this strategy much better, because you know it is already 12, 15, and 26. If it would rally more, I would not be having any trouble. So that I closed whatever means results were declared. Decay, IV crash out, premiums have come down. No point of holding unnecessary shorts. I booked profit time to time, and just was holding time itself would give me more profit. So during this Muhurata trading, I think I closed the entire trade with 27,000 rupees. If I had exited with 17,000, another 10,000 I would have missed out. If I was not holding this trade till the expiry week, I would be missing this bumper stellar returns. So in order to hold this strategy till the last week of the expiry, I made all these adjustments timely which made me comfortable to hold for longer time. So finally, I was holding this just like bull call spread. This is the trade book. You can pass the screen and go through each and every leg and dates, and also what are the adjustment 1, adjustment 2, adjustment 3. Finally, I closed with the 27,060 rupees, which you can in terms of return is a huge 25 or even more than that. This is a beauty of ratio spreads. When view or a direction is very clear, that is when you would be getting more benefit from ratio spread. Hope you understand this video and this strategy. Thank you for watching. We have Telegram group where we discuss more details, and I would share my live trades and adjustment time to time there. So that was up to date. You can get more updates over that. And to bring up this video and make you understand, I had taken a lot of efforts. If you like this video, if you please press the like button, which gives me more motivation to bring more videos and publish to you so that you learn and earn together. If you have any further questions, you can put it in the comment section. I would definitely reply back. If you have more interest to learn with me, you can join. There's a free Telegram group for live trades and more market updates and friendly discussion with many other traders. You can certainly join Smart Investor Telegram group. Once again, thank you very much for joining with me. Hope this strategy and video must be useful to you. Thank you. Bye-bye.